No one should be in any doubt. There is a tidal wave of Omicron coming.
The supply chain disruption that we're seeing at the moment is not a one-time thing.
The characterization of inflation as transitory is probably the worst inflation call in the history of the Federal Reserve.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. European stocks rise as traders weigh the risks of the Omicron variant. Prime Minister Boris Johnson warns of a tidal wave of new cases. The Fed is at the center of a massive week for central banks. Markets watch as Powell is expected to kick off tapering and lay the groundwork of rate hikes. Plus, great interviews this hour on Surveillance Early Edition. We'll speak to Morgan Stanley's head of sustainability, Jessica Alsford, and the chief executive of Octopus Energy, Greg Jackson. First thing is first, so let's check in on the markets. A lot of the focus is on central banks. Any kind of policy mistake or policy surprise this week will certainly reprice these markets. Now, a couple of things we need to mention. 20 central banks are meeting this week, amongst them the four big ones. The Fed, the European Central Bank, the Bank of England, and the Bank of Japan. Together, those four banks actually have control of 50% of the world economy. So any kind of policy readjustment for them could be quite significant for stocks. The European stock 600 gaining 0.4%. The DAX really powering ahead. Again, some of the things that we've heard from the new government with Olaf Scholz now heading that, gaining 0.8%. And then the other couple of things that I would watch out for, of course, some of the S&P 500 futures still being supportive is a U.S. 10-year yield. So you look at the U.S. 10-year yield, because if the yield curve continues flattening, it's going to make Jay Powell's job a lot more difficult when it comes to rate hikes. The other thing is Turkish lira beyond 14. At some point, it was 14.55. Let's have a look at what the European map. It's always a good thing to visually see how much, for example, the FTSE is losing or gaining 0.1%, so 0.1% higher compared to DAX. That's 0.8% higher. But a lot of the action, again, will be this week when we have central banks, including the Turkish Central Bank, and again, a lot of expectations that it's not going to go that well for that currency. So it is a big week for the world central banks, not least the Federal Reserve, which is facing the fastest growth in consumer prices in nearly 40 years.
You're continuing to see inflation broaden out, particularly among some of the service sectors.
High and persistent inflation is a problem for the economy. It's a huge problem for the most vulnerable segments of the population.
We are pretty much at peak inflation from the supply chain issues right now. I mean, you can already see some signs of auto production moving up. You can see some signs of some of these supply chain issues clearing.
There are people who are proclaiming that the supply disruptions are going to be over. They're not.
Does it change things materially? I think it just keeps pressure on the Federal Reserve.
The Fed backed away from the word transitory, but they still believe, and I think that Wall Street still believes, that this inflation problem that we have is going to resolve itself.
This is strong inflation data. I think it is pushing the Fed to accelerate tapering next week.
Right now, we're pretty split between either 2 to 3 hikes next year, and then, probably 3 hikes the following year.
We'll hear from the Fed on Wednesday, but they're far from the only central bank this week. On Thursday, it's the BOE, the ECB, Turkey, and others. The BOJ and Russia Central Bank are then on Friday. And of course, a common theme affecting most of the decisions will be fast spreading Omicron variant. So let's dive into what we know about Omicron so far and what it all means for the markets. Joining us now is Sam Fazeli, Bloomberg Intelligence's senior European pharmaceutical analyst, and our markets editor, Christine Aquino. So thank you both for joining us. Christine, if we start off with you, I mean, there's going to be a huge divergence in the central banks that want to tackle inflation, and they want to do it now, and the ones that say, look, I still have a supply problem, so the inflation question will come up in 2022.
Absolutely, Francine. I think that really is the big question for a lot of central banks meeting this week, right? And really, it's all about, again, this whole debate about whether it's transitory or a little bit more entrenched, and what central banks want to do about that. I think, some central banks probably have indicated earlier on in the year that, yes, they're ready to tackle this inflation problem. We'll probably put the Bank of England in this basket, for instance, but now we're seeing a bit of a turn in those expectations, as well as the indications that we've seen from the Bank of England, primarily because of what we're seeing as well in terms of the developments in Omicron. And so a big shift there in expectations, at least in the UK. And then, of course, for the rest of the world, it's kind of this balance between inflationary pressures and long-term growth.
Yeah, and Sam, I guess I don't know what this tidal wave of Omicron looks like in your eyes, because there seems to be a belief when you speak to a lot of people in your inner circle that, this is a virus or a variant that's less deadly, but actually we don't really know how it plays out, the effect of children, and whether we'll need more restrictions to tackle it.
Yes, hi, Francine. So I think what the Prime Minister is speaking about is just actually number of cases and infections, not specifically the severity of it. What they don't know is exactly that issue. So if you're expecting a very large number of infections, based on some modeling that I'm sure you've seen over the weekend, then you would want to make sure that people have got the best protection against that converting to severe disease and hospitalizations. That works with people getting a booster shot. So that's why I think there's this pressure in it now.
What is the one thing, Christine, that we know will impact consumer prices? Or, what do we know about consumer prices? Is this the kind of the benchmark that a lot of the central banks are looking at? And how does the flattening yield curve complicate matters for the Fed?
Well, very much complicating the matters, Francine. But yeah, as far as kind of consumer prices go, I think, central banks do have their preferred measures that take a look at indicators that are less kind of transitory, right? And less due to one-off factors and more sticky sources of inflation. But then when you look at kind of the dynamic in consumer prices, if you ask the regular consumer in the street, it's not really something that they would care about, whether, is this sticky or due to one-off. All they really would care about is the price of my shopping has gone up, and I am finding it less and less affordable to be able to buy the things that I used to be able to buy. And so I think this really is what makes it difficult for central bank, is to communicate this idea that they're not necessarily responding to those one-off factors, but then the people that they're meant to be serving, right? Consumers, and in theory, helping, aiding them in making those purchases. This is what they're seeing in the ground, is higher prices for goods everywhere. And so it really is this kind of balance between aiding the consumer and helping them kind of get through this short-term risks, while also balancing the longer-term factors that the central banks have to deal with.
Sam, can you lay out for me exactly what we know about Omicron? So what you're very good at is looking at some of the trials and some of the data and bringing them to the market before the rest of the world catches on. So what kind of data points are you looking at?
Yeah, so we've got plenty of data now showing that pretty much immunity that's given to you by 2 shots doesn't induce, at least a few months after the 2 shots, anywhere near the sort of antibody levels that you would want to see to protect people. So that means, which is why you're seeing lots of potentially reinfections. What we also know is from 2 or 3 different studies that if you boost people, their antibody levels after 2 weeks, a month after the booster, is much higher in terms of neutralizing Omicron. Perhaps not as well as it could be against Delta, but still pretty much increased. What we have now also is one data point from the UK that looked at the vaccine effectiveness in the population, and they suggest that with a booster shot, you're at 70 to 75% against an infection. Data as regards hospitalizations and severe disease will have to wait, I'm afraid.
Sam, thank you so much for all of the wisdom. Quickly, Turkish lira, I mean, it's gone past $14. I've never seen anything like it.
Absolutely, Francine. And that's really what traders are wondering now on the ground, right? Is how much further can it go before we see the central bank act to stem that? I know that, for instance, we've reported on interventions in the Turkish lira over the past month. We've seen them coming into the market and stepping in a number of times now. But so far, the impact has been very, very minimal. And so it really is a big question for the central bank this week. How are they going to react to this extended weakness, and what they're going to be doing longer term to make sure that it doesn't go past the staggering levels that we're seeing now?
Yeah, 14.46. And actually, I think moments ago, we also heard from the finance minister of Turkey echoing what the president said, that Turkey is determined not to raise interest rates. This is according to its new finance minister. Our markets editor there, Christina Kino, and our very own Sam Fazeli. Coming up, John Bilton, head of global multi-asset strategy at JP Morgan Asset Management, joins us to discuss his views on the markets and on his 2022 outlook. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, what could possibly go wrong? Economists are upbeat about next year, but could easily get blindsided again. Omicron, sticking inflation, and Fed lifting off are just three of the more obvious headwinds to our 2022 story. Bloomberg's Big Take today dives into the biggest economic risks for next year, and some of our guests have weighed in on what they see as the threats to growth.
I think there are three risks: Omicron, inflation, and overextended markets.
The number one risk is a pandemic.
COVID is clearly an issue.
COVID situation and COVID policies.
Pandemic and geopolitical risk.
There are warning signs out there, whether it's inflation, whether it's other political events around the world.
Geopolitics of China, Russia, and Iran.
I think we are in a much more volatile time.
There's likely to be twists and turns and ups and downs.
22 is another year of rebuilding, and it's going to be choppy. It's not just hiring. You've got supply chain issues.
I think the market's responding almost entirely to interest rates.
What is valued at such a level that will come down, that's interest rate sensitive?
I'm not sure the market's ready for 3 interest rate increases next year, and I think that may come as a shock to them.
If, as always has been the case before, Fed efforts to slow inflation lead to recession, I think all of those things are sources of risk for the market.
Well, joining us now is John Bilton. He's head of global multi-asset strategy at JPMorgan Asset Management. John, thank you so much for joining us today. First of all, what do you think will derail this equities rally?
Well, I think, you've had a range of things put forward as to sort of possible downside risks. And, we failed to look at the upside risks, which in fact, we've got a turn worth of EBITDA of cash available, which is yet to be distributed. We've got earnings expectations bottom up, which are really detached significantly from the very above trend level of growth that we're seeing. And we've got corporate balance sheets in really pretty good shape. So even if we get hikes next year, let's assume we get 3 for argument's sake. Certainly not our base case, but were we to get that, would still be leaving Fed funds 75 basis points to 100 basis points. And with inflation probably still above 2%, that's significantly negative real interest rates. So while, yes, of course, there are risks that can come from the virus, from stickier inflation, from overzealous policy, all of these have been flagged. What people don't talk about is the fact that risk has 2 tails. And, equity markets, to use the old moniker, they climb a wall of worry. And this one's been doing this since April of 2020.
But we're still seeing record highs. So, John, where do you see the most value? What's your biggest conviction right now?
Well, I think it's got to be in earnings, because, if we're looking at a world today where, although we've got the Omicron variant, I think that it's worth unpacking things. This is not the beginning of a crisis when we had no vaccines, very little coordinated control around governments, very little scientific data. Today, we've seen much more rapid response in terms of restrictions, but what we've also seen is much more rapid response in terms of the scientific community, pulling together. So could this knock growth out a little bit? Possibly. Maybe a quarter or so, but markets are discounting mechanisms. And at the moment, what they'd effectively do is discount forward. We're seeing some clearing up in the supply chain going on. We're seeing auto data being brought forward. We're seeing, a significant sort of improvement in terms of PMI data coming out of places like China. So all of this, to our mind, is pointing more towards the cyclical trade. And unusually, normally it's top-down analysts like me that are behind our bottom-up colleagues. And today it's the other way around. And we would argue that there's more earnings upgrades to come through if we are right that we see above trend growth through 2022.
My goodness, John, it's the world upside down. Within equities, what do you favor? Is it still US, Europe, and do you like emerging markets?
So at the moment, we're very much sticking to the developed market regions. That's where we see the earnings growth strongest. Emerging markets, it's actually quite tempting in some regards, because if you look at valuations, emerging markets have had a tougher time, and most of it comes back to China, which has really underperformed during this year. So valuations in aggregate have dipped around 25% or so from their peaks in price-earnings ratio terms. And so that gives you a reasonable entry point. The problem is that right now, you're just not getting that earnings uplift that we're seeing come through in Europe and the US. So as a result, we continue to favor leaning into developed markets. We acknowledge that the breadth has come down. We acknowledge that on price earnings ratios, they're a little toppy, especially the US. But given the cash that's being generated and given the earnings momentum, we would argue that that continues to be the right place to go. Were we to see anything of a correction, we still believe that it would be a buying opportunity because we don't think that the data are showing overextension in terms of positioning today, even though we are seeing markets at all-time highs.
John, what's your take on what the Fed will do next, and actually, you know, the interplay between the flattening yield curve and actually what Jay Powell can do into that hike that's potentially priced for mid-2022?
It's a super interesting setup. Let's look at two things. Number one, let's look at the tapering, and number two, let's look at the yield curve. On the tapering, the Fed has managed to drip into the markets the idea that they're going to accelerate the taper. And you know, what are they going to do? Given that they haven't created a taper tantrum, I think it's highly likely they go ahead. It's optionality for them. What it means is that if they're done by beginning of Q2, they have a lot of options with what they do with the Fed funds rate, the front of the curve. So we think that it's pretty much odds on that they will announce a faster taper. However, what are they going to do with the curve? Because today it's not just Fed buying that's anchoring the 10-year note. There's a lot of de-risking going on. There's liability management. There's the use of treasuries as high-quality liquid capital. So there's a lot of demand for treasuries away from the Fed, and that's keeping yields pegged. So that creates a dilemma, because if we see the front end go up too far too fast, it flattens the curve, which creates problems for the banking market. And it's this reason that we think that the Fed will potentially move a little slower. We also think some of the inflation data are likely to moderate into the middle of next year. But make no mistake, the level of the 10-year, even though it's a good way away from where cash rates are at the moment, will start to become a constraint as we move through next year for what the Fed can actually do.
John, thank you so much. John Bilton, their head of global multi-asset strategy at JP Morgan Asset Management, joining us this morning. Now, coming up, Chinese artificial intelligence firm SenseTime postpones its Hong Kong IPO after new U.S. sanctions on the company. We'll have the full story next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, one of the biggest stories today is, of course, the lira passed 14 to the dollar for the first time. This is really piling on pressure on the central bank that's forecast to keep cutting interest rates this week despite rising inflation. Now, the decline also came after the S&P Global Ratings Agency lowered the outlook on the nation's sovereign credit rating to negative on Friday, citing risks from the extreme currency volatility. You can see currently the lira trading at 14.4889. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Foreign ministers from the G7 have warned Russia to de-escalate its activities around Ukraine or face, quote, massive consequences. In a joint statement, the ministers said they were united in their condemnation of Russia's military buildup and aggressive rhetoric towards Ukraine. President Vladimir Putin has denied any intention to invade. Now, Boris Johnson is warning the UK faces a tidal wave of Omicron infections. In a televised address, the Prime Minister set a new booster target. With all over 18s offered a third jab by the end of the year, the UK has now reported more than 3,000 Omicron cases, with more than 1,200 on Sunday alone.
No one should be in any doubt. There is a tidal wave of Omicron coming. And I'm afraid it is now clear that 2 doses of vaccine are simply not enough to give the level of protection we all need.
Now, South African President Cyril Ramaphosa has tested positive for COVID-19 and is receiving treatment for mild symptoms. The nation is in the midst of a 4th wave of infections fueled by the Omicron variant, with more than 18,000 new cases reported on Sunday. In the U.S., President Biden has approved help for the state of Kentucky. Tornadoes ripped across the South and Midwest late on Friday, killing at least 70 people. Biden has now issued an emergency declaration mobilizing federal assistance effort for 15 counties. Kentucky's governor has warned deaths could now reach 100. And Mohammed Al-Arian says the Fed's characterization of inflation as transitory may have been the central bank's worst inflation call ever. The chief economic advisor at Allianz and Bloomberg opinion columnist has told CBS the Fed needs to move fast to regain control of the inflation narrative. Al-Arian sees inflation sticking near recent levels. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, we'll be speaking to Jessica Alsford, Head of Sustainability Research at Morgan Stanley, about ESG investing. Stay with us for that conversation. This is Bloomberg. European stocks rise as traders weigh the risks of the Omicron variant, while the Prime Minister Boris Johnson warns of a tidal wave of new cases. The Fed is at the center of a massive week for central banks. Markets watch as Powell is expected to kick off tapering and lay the groundwork for rate hikes. Plus, great interviews coming up shortly on Surveillance Early Edition. We'll speak with Morgan Stanley's Head of Sustainability, Jessica Alsford, and the Chief Executive of Octopus Energy, Greg Jackson. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So, another story we've been following very closely is the Chinese artificial intelligence firm SenseTime says it remains committed to completing its IPO after postponing its Hong Kong listing. Now, the delay comes after the U.S. sanctioned the company for its alleged role in creating facial recognition software used in the oppression of Uyghur Muslims. Now, Bloomberg's Vinisi Chan joins us with the very latest. Vinisi, could you tell us what the latest with the SenseTime IPO actually is?
Sure. So the company did not price its IPO according to its original schedule on Friday, and it's refunding the retail investor right now. And according to our sources, and as far as we understand, bankers and lawyers are still working very hard to update the prospectus, the risk factors in the prospectus, and hoping to relaunch the IPO as soon as possible.
Vinisi, thanks so much. Vinisi Chan there with the very latest on SenseTime. Now, European ESG funds have made an average return of 19% so far this year. That's according to Bloomberg data. That's underperformance compared with the MSCI World Index and the Stock 600 Europe Index. Morgan Stanley remains bullish on the sector, though. They see an impact investing yielding the strongest growth of all ESG strategies over the next 5 years. Well, we're joined by Jessica Alsford, Head of Global Sustainability Research at Morgan Stanley. Jessica, thank you so much for joining us today. So first of all, how urgent is it to have global standards? Otherwise, we risk greenwashing, and I imagine investor appetite will dwindle with it.
Yeah, and definitely you're seeing an increase in this desire to have some sort of standard definitions about ESG and sustainable investing. I would say that there's still always going to be a spectrum of approaches. There is no one homogeneous approach. You can have integration, thematic, impact. But what we're seeing, particularly in Europe with the SFDR regulation, for example, is a desire to make it much clearer about what funds are actually doing and whether they are adopting a sustainability strategy or not.
Jessica, when you look at some of the rate of growth of the ESG markets, and we were reminded of this last week thanks to our wonderful reporter Tasneem, $35 trillion of assets last year in total assets was considered ESG, and that, according to our calculations, could go to $50 trillion by 2025. Do those numbers make sense to you, or do you worry about greenwashing just because the numbers are inflated?
So I think the numbers are always really difficult to pinpoint when it comes to sustainability, to the point I made in terms of this spectrum of approaches. So does a fund that adopts a light ESG integration, should that be ESG AUM or not? And so you do get some very different numbers depending on the source. I think what's important is that you see the direction of travel. And so whether we look at the number that you've just mentioned, or some other data that we track, which is more specifically to ESG mutual funds and ETFs, you see this strong structural growth trend continuing. You are then going to see a more defined metric, again, referring back to the SFDR regulation, for example. So I think the number itself can be debated, but whichever source you use, you do see this growth in overall AUM.
Jessica, where do you see the most investor appetite? So you're global head of research for sustainability. Is it in water? Is it biodiversity? And actually, how's it changing where investors want to know and understand parts of the market better?
So I'd say that 2021 has been peak climate year, and understandably so. You've had a huge amount of policy and regulatory support, whether that be through the EU Fit for 55 package, the Biden administration rejoining the Paris Agreement, net zero targets from China and India, and obviously the recent COP26 conference. And this will continue, but I think it's now about action and investors wanting to see what are individual companies actually doing to meet the net zero targets that they've all announced. We also think that going into 2022, there will be a broadening out of sustainability themes. You have the biodiversity COP, which is coming up. You've got the new EU taxonomy for social characteristics. And so we're getting a much broader spectrum of questions starting to emerge. We also think that post-COP26, it brings into a reality as well that getting to 1.5 degrees is going to be very tough. And so investors should start to be thinking more about the physical risks of climate change in addition to the energy transition. So next year, we think is going to be a much broader selection of sustainability themes.
So what do you think was most exciting at COP26 when you look at methane or the transition economy? Is there a part of it that actually could be very attractive for investors in 2022?
So we think a couple of things. We think, first of all, as you say, some of the pledges that came out of COP26 with regards to the methane and some of the solutions there. Renewables, electric vehicles are still incredibly attractive from the growth characteristics, but then it comes down to what that transition actually means for individual companies. What are the returns that can be generated on this growth opportunity? We'd also say that it's about then looking within particular sectors and what are individual companies doing to be the leader in decarbonisation, and really getting into that granularity about what type of technology needs to be adopted in order to achieve those carbon savings.
So what is the technology that needed? I mean, when are we going to put a price on carbon, and how does that change everything?
And I'd say that that is probably one of the areas where we're a bit more disappointed post-COP26. We do have a very strong carbon market in Europe. Europe is also trying to drive that globally through the proposals for the carbon border adjustment mechanism. But we do need to see much more widespread adoption of carbon pricing in order to make some of these newer, more newer technologies such as hydrogen, for example, or CCS become more economically competitive with the higher carbon incumbent technologies. We've now seen a national emissions trading scheme started in China. And so we do think over the coming years, there will be more focus on carbon markets, but we're still a long way to go before we do get this global pricing of carbon.
Jessica, thank you so much. Jessica Alsford, there, head of global sustainability research at Morgan Stanley, joining us this morning. Now, coming up, Europe's winter energy crunch. We speak to Octopus Energy Chief Financial Officer Stuart Jackson about the price of power. Don't miss that interview. It's coming up shortly. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. TSMC says it is in an early stage contact with Germany about building a new chip plant, while the Taiwanese company hasn't picked a location yet. We're told the company will consider various factors, including government subsidies, consumer demand, and the talent pool. The discussions come as the EU and others look to increase demand domestic semiconductor production to mitigate future supply chain disruptions. Binance has withdrawn a request to open a cryptocurrency exchange in Singapore. The company's fiat-to-crypto trading platform Binance.sg will also wind down operations by mid-February. The withdrawal is likely to end speculation that the Southeast Asian city-state would become the company's global headquarters. Saudi Arabia has boosted revenue forecasts for the next year following higher oil prices and production volumes. The kingdom now sees its first budget surplus in more than 8 years and the fastest economic growth since 2011. The Saudi finance minister told us excess revenue will be used as a buffer for the future.
We wanted to make sure that we have a stability so that our budget does not fluctuate based on revenues, but actually provide a sustainable fiscal framework that will enable us to plan better as government, but also enable the economy and the private sector to plan better. So regardless of the revenues, the budget ceilings are set based on a formula that will not fluctuate in the future.
And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, foreign ministers from the G7 have told Russia to de-escalate its activities around Ukraine or face massive consequences. The warning follows Joe Biden's call with Putin, where the U.S. president said there would be first sanctions if Russia moved to invade. Well, joining us now to discuss all of this is our executive editor for international government, Roz Matheson. Roz, there's been a lot of tough talk over reprisals for Russia, but how much would the U.S. and Europe actually be able to respond?
Well, that's right. There's been a lot of conversation over the past week or two by the US and Europe and others saying that if Vladimir Putin did proceed with an invasion of Ukraine, that he would face very, very stiff retaliation, massive and destructive retaliation, in fact, is what they're saying. But it's very unclear if it would rise to that level. As a starting point, of course, the US and Europe are not going to go in militarily to defend Ukraine. They've made that clear already. So that leaves financial and economic penalties on the table, potentially things like sanctioning coal, penalties for Russian banks, and the nuclear one would be, of course, to hit SWIFT, which is the global payment system, and you try and cut Russia out of that entirely. But those are different levels of response, and each one carries its own repercussions itself, because if you cut Russia out of SWIFT, you also affect ordinary people in Russia significantly, and it goes well beyond Russia to companies that are based outside the country. So that's going to be one that will be very, very difficult to get agreement on, for example. So then you might just get degrees of response, low-level stuff like hitting Russia banks, which on the surface of it is unlikely to deter or stop Vladimir Putin if he did decide to go into Ukraine.
Roz, Putin is speaking with President Xi on Wednesday. What will they be talking about?
Well, it's an interesting time for the conversation because it comes before Thursday's meeting of EU leaders, where they might be sitting down to discuss in greater detail what sort of penalties the Russian president could face. So he might be looking around and saying, well, if I have a chat with the Chinese president and make sure that he and I are aligned on this thing ahead of time, that would be useful. Beijing adopts a policy generally of not getting involved in external conflicts and is likely to stick to that in this moment. They especially would not be wanting to get involved militarily. But at least even saying that they're going to stay out of it might offer some sort of moral support for the Russian leader. And especially they might want to talk about what would happen if Russia gets sanctioned, because China has been a very big buyer over the years of Russian commodities, including, of course, coal, which is one thing that could come onto the table. So is there some sort of understanding about economic support that Beijing might give to Russia if it faces further penalties from the US and Europe? And both countries at least also are trying to build greater independence in their financial system by deploying the yuan more broadly around the world and lessening the reliance of Russia on the dollar. So they might talk about their sort of collective efforts on that front, which are all about saying, well, we need to build our own resilience here in this current world order, and also we need to perhaps face things together in terms of further threats from the US. So there could be at least some conversation between them about that.
Roz, thank you so much. Roz Matheson there, Bloomberg's executive editor for international government. Now, coming up, Europe's winter energy crunch. We speak to the Octopus Energy chief financial officer about the power crunch here in the UK that's seen a number of providers collapse. Don't miss that interview. It's coming up shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Europe's energy crunch is set to last as electricity prices climb to fresh records, fueling inflation and raising bills for millions of households and industries across the continent. In the UK, no fewer than 24 energy providers have collapsed since the start of August, and they've been squeezed between surging wholesale prices and a retail price cap. Well, to talk about all of this, we're joined by Greg Jackson. He's Chief Executive of Octopus Energy. They've just raised $300 million in new investment from Canada's top pension funds, valuing the company around $5 billion. Thank you so much, Greg, for joining us back. We had a good conversation about some of the energy price conundrums a couple of months ago. Give me a sense of what this new investment, fresh investment, means for Octopus.
The energy crisis is really illustrating the importance of moving away from fossil fuels. The crisis at the moment is driven by global gas prices. This investment is going to let us do two really important things. One is build a lot more renewable generation, and the other is continue developing the technology which enables people to make the most of green energy when it's abundant. That'll help drive down the cost of energy as it gets greener.
How much, Greg, when you look at the price of energy, right, does it have to be 30% lower to actually make a difference into also how much demand from that is, or what kind of level for break-even makes a difference for Octopus?
Look, I mean, first of all, with global gas prices where they are, sooner or later, customers are going to end up paying for that. Here in the UK, the energy price cap has slowed down the impact, but it will flow through. I hope we can find ways as an industry working with government to smooth out that rise over a much longer period of time. It's the same in other countries. You know, we've got energy operations in Germany, in Spain, Italy, the USA, and everywhere around the world we're seeing this problem. The most important thing is the long-term investment. But, you know, where we stand today, we just don't know what gas prices are going to be doing next year.
Yeah. Greg, I mean, I think the biggest problem with a lot of the UK suppliers as we went into the power crisis was that they were unhedged. Did Octopus actually see the crisis coming? How hedged were you?
That's a great question. Look, a well-run business in any commodity market is going to have a hedging policy. It essentially matches the period of time for which our prices are fixed to our customers with the period of time we're buying. So, you know, it's like in financial services. You should, if you're selling long, you should buy long. That's what Octopus has always done. So we didn't foretell the crisis, but that sensible policy means you can, you know, kind of ride those waves.
Prices seem to be on the rise again after, you know, easing following the peak in October. So how is the crisis going to evolve? I know it's a difficult question, but does it get worse before it gets better? How long do you expect it to last?
I think the big question is whether we're now entering a period when we're going to be seeing higher fossil fuel prices. You know, the geopolitics here is complicated. You were just talking about, you know, the sort of tensions between US and Russia, for example. You know, until things like that are resolved, you know, we're going to be at the mercy of what's going on in the supply and demand of fossil fuels.
The biggest, you know, problem we've seen with a lot of the UK suppliers is that a lot of them had to go under at the same time. And in the midst of the crisis, many companies were struggling for cash. Now, Octopus is one of the few that managed to get not one, but two investments into them. What's your business case?
Yeah, I think there are two things that set Octopus apart. The first thing is we have relentlessly invested in technology. We created a platform called Kraken, which gives us lower operating costs than rivals with better service. But it also enables us to make the most of green energy when it's abundant by, for example, smart optimization of charging cars or of thermal use of electricity. So Kraken has driven down our costs, but we also license it to other companies. And that means that, you know, we've got a technology business now that's worth about the same as our core energy business. And we're increasingly now investing in the future. So, you know, lots more renewable generation. And as you see here on the screen, you know, the heat pumps, which are the future of decarbonized heating.
Greg, one of the things we're trying to figure out is, of course, you know, customers probably will face a sharp increase in prices from April of next year when the new price cap will come into force. How big of an increase could that be? And there are a number of companies that are asking the government to cut the VAT on energy bills. Are you one of them?
Look, even more important than cutting the VAT is to remove the levies that are on electricity. Last year, 23% of the UK electricity bill was green levies. Germany's just announced they're going to be cutting theirs. The UK's got to follow suit. You know, electricity is the green energy of the future. Why are we taxing it so heavily? But that's the number one thing. The other thing we've got to do is just say, look, this is a 1 in 30-year event. We should be spreading the cost over more than 1 year. So I hope we can work with the government and with the regulator to smooth the cost so that customers don't get that huge increase that is otherwise a risk.
Okay. Do you know how much that huge increase could look like? How difficult is it to model at this point?
Yeah, we really don't know, because I think although the price cap in the UK has got a formula, there's quite a lot of discretionary elements for the regulator, and we really hope they keep it down. The price cap's done a very good job of looking after customers. It's important it carries on doing that.
Yeah. I mean, look, there are a number of questions, actually, why the UK government decided to take over rival Bulb. Why do you think the reason for that was, given it's actually more expensive for the government, and would you be interested in taking over those customers?
So the thing with Bulb is that it's so large that trying to clean Bulb up during the current volatile markets would be very expensive. Actually, if you'd gone through a different process than they did, Bulb's liabilities would have been picked up by taxpayers or bill payers, but its assets would have been lost. This approach actually lets you keep the assets and kind of help sort the company out at a time when markets are smoother. That'll actually be better value for taxpayers and better value for bill payers.
Greg, as always, thank you so much for joining us. Greg Jackson there, the Chief Executive of Octopus Energy. A good conversation, of course, on what that also means for the consumer, rising prices in energy, and of course, at the end of the day, what it means for consumption. Now, Turkish lira actually tumbling past 14 to the dollar for the first time ever. It was quite an excitement in the newsroom this morning. This is a huge psychological level, and of course it's piling pressure on the central bank that's forecast to keep cutting interest rates this week despite rising inflation. I have to say the decline started after S&P lowered the outlook on the nation's sovereign credit rating to negative on Friday, citing risks from the extreme currency volatility. We'll have plenty more on the markets. The picture is a lot of focus on what central banks will do this week. European stocks, but also U.S. futures are gaining some 0.6% for the European stock 600. Again, miners leading the advance as the price of iron ore jump on expectation that China will move to increase stimulus next year. Bloomberg Surveillance Early Edition continues in the next hour, and this is Bloomberg.
No one should be in any doubt. There is a tidal wave of Omicron coming.
The supply chain disruption that we're seeing at the moment is not a one-time thing.
The characterization of inflation as transitory is probably the worst inflation call in the history of the Federal Reserve.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Monday, December the 13th. Our top stories today. Battle on all fronts. Boris Johnson warns of a coronavirus emergency, and investors make their biggest bets against the pound in more than 5 years. Tax fight on Capitol Hill. Democrats squabble over details as one version of President Biden's plan doesn't include a proposal to expand state and local tax deductions. Markets brace for a wave of central bank decisions. The Fed, the ECB, and the Bank of England are among those holding crucial meetings this week. Welcome to Bloomberg Surveillance, everybody. This is the early edition from London. I'm Anna Edwards with Caroline Hyde in for Kailey Leinz. Matt Miller is with us, of course, in Berlin. Good morning to you, Caroline. Good morning to you, Matt. Really interesting to see the way that equity markets, risk assets managed to keep their cool, Matt, despite all of the narrative we've heard, certainly from the UK government, about a wave of Omicron coming.
Yeah, absolutely. I mean, we do have also a wave of central banks coming, which I think is one of the things that's bolstering markets, and the expectation that China may increase stimulus. That's really moving, especially commodities, but a number of stocks, obviously miners as well. Check out what's going on in Asia. Right now we have a drop on the MSCI Asia Pacific Index of just about 0.2%, but big gains in the commodity countries. New Zealand is up 1.1%, and it's a big move. It's more than 2 standard deviations away from the typical gain or loss in the New Zealand benchmark index. You can see the yen right now is off against the dollar. You can now buy 113.7 yen for $1 US. So there's not a lot of safety seeking in terms of the yen. And this is the commodity I was talking about, iron ore, up 7% in Singapore right now. Expectations that China will boost fiscal stimulus, boosting growth, boosting the need for this primary core metal in building, especially construction, even as we worry about what's going on with the property developers there. In terms of the U.S., that's actually helping us here. The S&P futures are up even after another record high on Friday. We closed at a record after that CPI number came out at 6.8%. The U.S. 10-year yield is down a little bit, so investors are buying those bonds right now ahead of a possible double of the tapering, quicker taper. The dollar index also gaining back up to basically 1184, so back up to a relatively high level for the U.S. dollar, and it is a big gainer against almost all major currencies today. And then finally, Bitcoin down 2%. If you think this is a major currency, the dollar is gaining against that right now. And we're going to talk to CZ of Binance later on in the program. I'm really excited for that, to see what's going on. Caroline Hyde, you know, when I started covering Bitcoin, it was trading for $600 a pop. So I never thought I'd see less than or more than 40,000, more than 30,000 really. But it has been to 69,000. So we've come down a long way from there.
Matt, this is why I'm here on this show in the morning, is for your crypto chat, because they got a little bored of my NFT goings on in the afternoon. So I'm giving them a little bit of respite for the week. And I'm here with you both. It is such fun to be here and covering a European market that is basically playing a bit of catch up. We had a bit of a lackluster end to the week, whereas the US shot to new record highs. And in fact, we do see a very strong sort of risk on sentiment to the day. The DAX up more than a percentage point. FTSE MIB over in Italy up 0.7%. So money moving into the risk assets, money moving into European markets, of course, as they have underwhelmed versus the US over the rest of the year. In particular, travel and leisure has been your key concern. All of this amid what has been ongoing concern about Omicron. Of course, the UK front and centre in that narrative at the moment. So let's flip it on, because look, the UK is kind of your laggard of the day, up only 0.1%. I want to focus in on what's happening in terms of central banks as well, because Omicron, central banks, that is what is going to dominate our conversations, not on the day, but on the week as well. The euro dollar currently off by 0.4%. Matt, you were just talking about the strength of the US dollar. Interestingly, some feeling, Sebastian Galli over at Nordea saying, look, wait for Thursday, because it's not just the Federal Reserve with a central bank policy this week. It's not just the Bank of England. It's not just the Bank of Japan. It is also Europe. In fact, there's 20 central banks this week that we get an update on policy. Could Madame Lagarde be more hawkish in her sentiment? That is what many are anticipating. That we're still seeing weakness on the euro as we see movement into the dollar. Frankfurt Airport traffic down month on month, Anna, and indeed we're seeing airports front and centre as we worry about December and indeed Omicron again. So Frankfurt Airport, one of your laggards in Germany. Natural gas futures up 1.8%. We're going to dig into the Russia story there. Once again, concerns about Ukraine coming from the G7 over the course of the weekend. What does that mean for Nord Stream 2? What does that mean for gas supply? We rise up 1.8% in the US. It is up significantly in the UK and in Europe. And I last on the Turkish lira. Once again, sentiment, we had Francine talking about this. Once again, for the first time, record movement in the Turkish lira. We are now weaker as we get that call from Standard & Poor's over the weekend.
Yeah, and some intervention then coming through from the central bank. Thanks for the update there, Caroline. Just a breaking news line across the Bloomberg. The UK set to be added to Hong Kong's highest risk COVID list. This a headline coming from the South China Morning Post right now. We'll continue to monitor how various nations around the world categorise travel risk. This interesting focusing, though, specifically around the UK, just as we heard those warnings from Boris Johnson about a wave of Omicron. Now, a look at what is ahead this week. Fed officials are due to deliver their rate decision on Wednesday. Have we said it's a big week for central banks? It really is. Some 20 meeting globally. Analysts are watching, though, in terms of the Fed for a potential acceleration in the pace of asset purchase tapering. On Thursday, we turn our attention to the ECB, where we expect the decision there. The central bank called the inflation spike a hump. That will ease next year, their version of transitory. We also have the Bank of England decision. That's scheduled for Thursday. A lot to focus on when it comes to the UK then this week. Economists expect it to hold, that's the Bank of England, hold off on its first rate hike until February. That first rate hike keeps getting pushed out and pushed out. This time it's Omicron to blame. And EU leaders meet in Brussels. They will discuss whether mandatory vaccines are needed to help fight the ongoing spike in COVID-19 cases, as well as the new Omicron variant. And it's a key week for Chinese data as well. The monthly data dump will offer the latest health check on the world's second largest economy amid concerns the recovery is losing momentum. We'll get retail sales, industrial production and the like. Back to our top story around the UK, though. The UK Prime Minister warning last night that a surge in Omicron infections is expected in the coming days, leading to a further acceleration of the booster programme. Let's get to Bloomberg's Laura Wright, who can take us through the details. Laura, it's a different tack this time around, of course, a much more vaccinated population, putting the emphasis on boosters, not on lockdowns. So what did we learn from Johnson's warning last night?
Get boosted now. That was the key message from Boris Johnson. The government bringing forward their target for booster vaccinations by 1 month, so all those eligible can receive a booster shot by the end of this year. The UK is actually outperforming Europe and the United States in terms of booster shots administered so far. Almost 30 in every 100 adults has received one in the United Kingdom. The government have decided to move quickly. Omicron cases stand at just over 3,100. Boris Johnson wanted to assuage concerns within the scientific community that this time around the government is acting quickly. It's worth noting that the CDC reported in the United States that over the weekend that the first handful of Omicron cases discovered had mild symptoms.
Yeah, I saw these headlines yesterday from Boris Johnson and was, I don't want to say frightened, but alarmed. How have the markets reacted to this extreme declaration of, I guess, war on Omicron?
Yeah, it was another Churchill-style address from Boris Johnson. In terms of the markets and the pound more specifically, it sold off initially before briefly recovering and then adopting a more downward trajectory, currently hovering around year-to-date lows. Now, the markets are repricing expectations of a Bank of England hike or action on Thursday. I was chatting with Viraj Patel from Vander Research last night, and he was telling me the chances were already as low as a coin toss, but last night's announcement from the government make that highly unlikely going forward.
OK, thanks very much. Of course, remember, when we listened to Boris Johnson speaking and the words he was using, he is also speaking to his own party, which is divided on the need for further measures to tackle Omicron. So he's trying to convince them. Important to bear that in mind. More on that later on in the programme. Thanks to Laura Wright for an update there. Over to Washington now. The Senate Finance Committee released an unfinished version of President Biden's tax plan, but Democrats remain undecided on SALT. Meanwhile, Bill Ackman, Pershing Square Capital Management founder, has joined the debate. He says that raising SALT to $80,000 makes no sense. Jack Fitzpatrick, Bloomberg government reporter, joins us now from Washington. Give us the latest then on this SALT deduction then, Jack. What do we need to know?
Yeah, so the Senate Democrats put out an unfinished bill yesterday to move this forward, essentially so the Senate parliamentarian can look at every other part of this and make sure there are no big problems. But as you hit on, the biggest question mark still remains. The question is not only whether to increase that state and local tax deduction from the current $10,000 to $80,000, but who it would apply to. The conversation lately has really been between Senator Bernie Sanders and Senator Bob Menendez from New Jersey, importantly. And Sanders has argued there should be a cap so that only anyone who's about the top 1% making $400,000 or $500,000 a year should not get that. Menendez has pushed for a higher number. That continues to be the question, and they still don't have answers, although they're trying to move forward on the process issues with the rest of the bill to at least inch forward on this bill.
Let's talk about inching forwards, Jack, because, I mean, what is the likelihood that we get this Build Back Better, this nearly $2 trillion of tax and spend passed by Christmas? That's the aim. And, of course, we had President Biden taking to the airways, primetime U.S. national television, trying to talk about that bill.
Yeah, that has been the goal, especially because at the end of the year, the current child tax credit expires. That would be noticeable as of mid-January when there would be set to be another payment. But of course, Democrats we've talked to lately have downplayed the idea of a real deadline at the end of the year. They have said that if there were to be a deal in January, they could make that tax benefit retroactive. Both moderates and Democrats have said, don't worry about the end of the year supposed deadline. We're going to continue working on this, which I do think is a sign that it's been a little bit delayed. It is true that a deal in January or even February would be just as big for Democrats as a deal in December, but they are moving ahead at seemingly a pretty slow pace at this point.
Jack, thanks very much. Jack Fitzpatrick of Bloomberg Government. Thanks for joining us with the latest on what is happening on Capitol Hill. Now back to the markets, and oil extended gains after its biggest weekly advance since late August on more signs that Omicron won't be as bad as initially feared and predictions that China will soon start adding fiscal stimulus. That's the narrative that's gripped the oil markets then. Eddie van der Veld of Bloomberg Markets Live joins us now. Eddie, what has legs in the oil market then? What is the trend that you're watching for next? Because yes, oil prices on the rise, but only by a little, and it was a strong week last week.
You know, it's really interesting for the oil market because, yes, the rally had been sapped a lot by the fear of, you know, this stopping of international travel that comes as a result of Omicron. Now, Omicron perhaps not as scary as some people had thought. But here's the thing. We are now looking at OPEC that might... You know, they might pump into rallies and they might cut if prices fall too far. I think OPEC would be quite happy to see prices stable around this sort of $70 a barrel level. They won't want to see it rally too much because then they get a lot of noise from the US, and they don't want to see it fall too far because then they get a lot of complaints from their members. So, you know, you could see oil just sitting around these levels until year end at least.
Eddie, what are the chances we get fiscal stimulus out of China, and what does that do to the commodities that you watch?
Yeah, it's, you know, I think China, obviously, there's a big incentive for them to provide stimulus, and in a particular way. So previous rounds of stimulus in China has been targeted very much towards the consumer. This time around, they will want to support the property sector. The property sector, obviously, you know, if you build big buildings, you use a lot of steel. You also use a lot of copper. We're seeing steel up significantly. We're not seeing copper move at the moment. So perhaps that's something that the market is underpricing at the moment. But as you pointed out earlier, the miners really benefiting. In the UK, the biggest movers to the upside are your BHP, your Rio Tinto, all of the big miners that are very reliant on iron ore.
Got it. Eddie, thanks very much. Eddie van der Veld there from Bloomberg MLive. Check out the blog by typing MLIV Go on your Bloomberg terminal. Let's take a look at some of the stocks on the move in the pre-market for the U.S. this morning. Lucid is one of a group of stocks, including Airbnb and Zscaler, that are going to get a boost from joining the NASDAQ 100. It should be noted this stock has come crashing down. I mean, it was worth almost $60 a share, and it was off, I think, 18% on Thursday. So Lucid has had its troubles today, though, up 7% in the pre-market. Speaking of troubles, Peloton took a hit after Mr. Big died riding the bike in whatever the new Sex and the City series is called, and then there was that, or something like that. In any case, Ryan Reynolds and his advertising company did a great spot over the weekend with the actor who plays Mr. Big back on the Peloton saying, hey, I'm alive and well. As a result, the stock is up more than 3% in the pre-market this morning. And then Apple is one. Keep your eye on this stock. Today could be the day that we see a $3 trillion company made out of Apple. It's up just about 1% in the pre-market, but it's worth, I think, $2.944 trillion. So it only needs a little bump to get over that $3 trillion hump, Anna.
And just like that, Matt checks the markets. I missed Samantha. Coming up on this programme, a big week for central banks. We'll take a look at where their paths might diverge and the outlook for 2022. We'll speak with Geraldine Sundstrom of PIMCO. Plus, we'll get the latest on crypto from CZ, Binance CEO. He joins us later on this hour. This is Bloomberg.
Welcome back to Bloomberg Surveillance. I'm Matt Miller here in London alongside Caroline Hyde, joining us as a special guest out of London with Anna Edwards as well. I've got a chart for our listeners on radio. I will say, I don't really need to walk you through it because you've seen it before. It's the yield curve. This is the 2s, 10s. But the interesting thing here is, as we know, flattening, getting back to levels that we haven't seen since the beginning of the pandemic. It's a different time, though. At the beginning of the pandemic, we weren't thinking about rate hikes, and now we really are. Marcus Ashworth, the Bloomberg Opinion, joins us to talk about what it means to see a yield curve flattening like this as the market pulls forward expectations of increases in the Federal Reserve's benchmark rate. Marcus, what do you think?
Well, I mean, simplistically, it means certainly the long end of the bond market doesn't believe that inflation or growth are going to be at these very strong levels of rapid increases for very long. So, and essentially, it's like 1 or 2 rate hikes, from the Fed and other banks like the Central Bank of UK or 1 or 2 others, and that's it. So they don't think the economy is going to be having super strong growth lasting much longer, perhaps because the fiscal boost is waning away. And likewise, inflation. Can I use the word transitory again?
I think you're allowed to use it advisedly. You're qualified, Marcus, to use that word. So we fear policy mistakes then. Is that the case, Marcus? And with that in mind, what do you expect the Bank of England to do this week? Because last month, the markets expected. This month, the markets expected until Omicron, and now they don't expect anymore.
The Bank of England, bless them, have missed their window. I think perhaps they're going to hug very close to the Federal Reserve, who may, should we say, at the current expectations, hike in June. I'm even fearful that the Bank of England may not be able to hike in February. But certainly it looks like most people are guessing that they will not hike on Thursday, only 15 basis points maybe. They could and should have done it in November, but they've missed their window, I think. And therefore we'll probably see them prevaricate in the big quarterly review they have again in February, and whether or not Omicron will know by then whether or not it's serious enough. There are some good signs on the economy, actually. One of the big ferry companies just came out and said that the bottlenecks are easing up. So it's obviously going to hit growth very hard, though, in December, the lockdowns and various
Marcus. Thank you very much. Marcus Ashworth of Bloomberg Opinion. Remember, for more market analysis, check out MLIV Go on your Bloomberg terminal. All the thoughts of the Markets Live team there. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Caroline Hyde with Anna Edwards in London and Matt Miller, who's in Berlin. And of course, we've got to get to the first word news, hey, because in Turkey, the death toll from Friday's tornadoes may be less than originally feared. Still at 50 people are believed to have been killed. Kentucky's governor says more than 1,000 homes were destroyed. Now, the storms killed at least 14 people in 4 other states in the South and Midwest. The biggest airlines in the UK are asking the government for economic help. New travel restrictions threaten to upend the peak Christmas season for a second year. Now, the CEOs of British Airways, Ryanair, were among those writing to Prime Minister Boris Johnson. They asked for emergency economic packages. And indeed, that just seems to once again be a call from some of these key sectors hit front and centre by Omicron. They're asking, of course, also to not have such expensive PCR tests being run out of the UK. Yeah. They are expensive, but what else is, well, an airline, a person, a passenger to do to feel safe?
Yeah, absolutely. We want to feel safe whilst travelling, but yeah, the aviation sector objecting to the cost of travel, objecting to, wanting more support. But this is a broader topic, isn't it, Matt, around fiscal support, because if we are going to enter a period with further regulations around COVID, we don't see the fiscal support coming this time around.
Not yet, right? And that'll be a great thing to talk with our next guest about. Do we see more fiscal support out of Europe? Geraldine Sundstrom joins us, PIMCO Portfolio Manager and Asset Allocation Strategist, as we hit a wall of central bank decisions this week. This is Bloomberg.
This is Bloomberg Surveillance, the early edition. From London, I'm Anna Edwards with Caroline Hyde in for Kailey Leinz. Matt Miller is with us in Berlin, of course. And Caroline, looking at European equity markets, it's interesting to contrast the language, the tone of what we heard from Prime Minister Boris Johnson yesterday. Pretty alarmist, really. And yet we make gains on European equity markets as a whole. The London market held back. It seems the market focusing instead on the opportunities for fiscal stimulus in China, that dominating the mood, rather than the fight against Omicron here.
And that's why miners are on the upside. The iron ore prices, really seismic shift up about 6%. That, of course, feeds into mining stocks. But once again, what is on the downside? What is on the downside for the entire year, the only industry group? Travel and leisure. What's on the downside today? Travel and leisure. Therein kind of is the Omicron read. Therein is the worry that we're not going to be able to get on planes. We're not going to stick to our Christmas plans.
Yeah, absolutely. And the sector asking for more help, as we discussed. Matt, what do you see ahead of the US session?
Are you happy to have someone else who says leisure on the program with us?
I am. Well, I'm happy to outnumber you for a change.
It's so fun to say leisure. Okay, we
You're
have
not supposed to laugh,
gains,
Matt.
really. It's a risk-on, it looks like a risk-on session. I mean, the Stock 600, the European benchmark, is up 0.5% right now. S&P futures are up 0.25%. And it's not just, you know, gains in the index, it's gains after an all-time high. So gains on top of already seeing massive gains year to date, more than 20% this year after 20% last year and more than 20% the year before that. So this rally continues. The 10-year yield coming down a little bit. Investors are buying 10-year treasuries. This is going to be something great to talk to our next guest about, because we're expecting a faster taper and sooner rate increases. Why would you want today's yields when they're going to raise them and you could get tomorrow's? Bitcoin down 2.5%. We have CZ coming up from Binance. I'm excited about that. 48,000 doesn't seem like a lot when you look at it from 69,000, but it does seem like a lot when you think Bitcoin is usually worth like 1,000, or if you're an old person, that's how you'd look at it. I'm really excited about the pre-market because we have some big movers, that I care about, like Lucid, just because I like cars, and it'll be interesting to see how they do. They've gotten crushed recently. They were down 18% on Thursday, but they could get added to the NASDAQ 100, or they will get added to the NASDAQ 100, along with Airbnb, Zscaler, and some others. So they're getting a boost from that. Peloton, another home run commercial from Ryan Reynolds' advertising company. Who knew the great-looking actor was also such a smart entrepreneur? I recommend you check that out. And then Apple, probably the most exciting move, because we could see, I think, for the first time, a $3 trillion company. And it wasn't 2 years ago that Apple was worth $1 trillion. That means since we went into the pandemic and lockdown and everything, they've tripled in size. They've added an Amazon to themselves. So Apple just absolutely crushing it, and I'll be excited to see if that milestone happens. Caroline, what are you watching?
I mean, I'm going to get a little bit glass half empty at the moment now, and I'm going to focus in on what's happening in terms of Omicron, I'm afraid. Of course, in many ways, Apple has been the bellwether, has been your safety trade. Some of these big tech names do well in the face of the virus and the variant. And once again, I just want to show what's happening in terms of actually the differences in tactics taken by different countries. Look at here in the red. This is kudos to Dan Curtis, who always brings us the greatest charts. This is, of course, Austria in the red, managing to turn around its caseload. The reason? Well, because they took really strong restriction steps. They locked down. They're now opening back up. They managed to totally turn around the curve. In the yellow, also rolling over, has been Germany, as they put restrictions on those who aren't vaccinated. No, you can't go to the cinema. No, you can't go to the theatre. No, you cannot go to a restaurant. But Here in the UK, I'm afraid the white line is ticking up. You had that breaking news at the top of the hour, the fact that Hong Kong is potentially putting the UK on its highest alert list when it comes to travellers in terms of COVID. So once again, how are they going to address this particular curve? How does the Bank of England think about it as we go towards those all-important central bank meetings this week? Perfect person to be joining us on all of it is Geraldine Sundstrom, PIMCO Portfolio Manager for Asset Allocation Strategies. Allocate your assets for us right now, Geraldine, in the face of this risk of Omicron. How much is it changing you tactically? How much are you still sticking to perhaps growth or not growth at the moment?
Good morning. Well, there's still a lot of unknown around the Omicron, in particular, the severity of it and how hospitalization are going to occur. At the moment, what Europe is going through is mostly a Delta wave still at this juncture. I think when we look at 2022, and because the virus tend to make waves around winters, we think that growth is still going to remain above trend, and that is a positive backdrop for risky assets.
Geraldine, good morning. What kind of assumptions are you making about fiscal support at this point? Because I was talking about this earlier, and Matt made the point, fiscal support not forthcoming in Europe yet. But if we do see further restrictions imposed, would you expect to see further fiscal support? The UK situation I'm thinking about in particular, maybe in other parts of Europe, the regular safety nets suffice?
Well, emergency support is clearly gone, but we shouldn't forget that there are still a lot of stimulus in the pipe. In particular, the European recovery package, is still, only now being put at work. In the United States, we might get the Build Back Better program. And of course, it looks like China is going to loosen a little bit on the fiscal side. So when you look at it on a sort of global scale, even though, of course, in 2022, there will be a lot less fiscal stimulus, but we're not falling off a cliff that much. There are still something that are going to continue to diffuse throughout 2022, and that should support growth as long as we, the big assumption in all of this is that each wave of the COVID is less severe.
Geraldine, why investors continue to buy bonds as we expect the Fed to tell us it's speeding up the taper and we're moving forward our expectations of a rate hike? How much further down can we go on 10-year yields?
Well, it's very much our forecast that maybe yields here are a little bit on the expensive side. But at the same time, when you have, a multi-asset portfolio with risky asset, we still think that safe bond is one of the best diversifier out there. And the fact that many central banks have been hiking interest rates or tightening monetary policy has anchored the credibility and potentially, anchored the back end of the curve. So we would still expect yield to creep a little bit higher from here, but not something dramatic going forward.
So we've seen this flattening. We were talking with Marcus Ashworth about what that means earlier. He said basically it means investors don't expect these kinds of inflation numbers, don't expect these kind of growth numbers to be around for that long. What does that mean for hikes? How many and how quickly?
Well, we'll see in terms of the Bank of England looks likely to kick the count down the road to sometime into the earlier part of 2022. From the ECB, it's not on our horizon, very far ahead. When it comes to the Fed, we'll have to really watch carefully the dot plot. Our forecast is still to have 2 hikes in 2022, but clearly the risk are to show a third hike potentially. But that's already priced by financial markets, so it shouldn't come as a shock to market during this week. I would think that the writing is very much on the wall already.
Yes. Is it possible to have a hawkish surprise, I suppose, from the Fed is the question some people are asking. Geraldine, thanks very much for joining us. Geraldine Sundstrom, PIMCO Portfolio Manager for Asset Allocation Strategies. Coming up on this program, CZ, the Binance CEO. That's coming up shortly. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, PwC US Chairman Tim Ryan joins. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Anna Edwards and Caroline Hyde in London. Binance has withdrawn a request to open a cryptocurrency exchange in Singapore, ending an effort that started last year, an effort to win approval from authorities there to trade in a regulated market. The company's fiat to crypto platform, Binance.SG, will also wind down operations and close by mid-February. And we've seen this kind of pushback before, notably in the UK. CZ joins us now. He is the founder and CEO of Binance to talk about what it means for his business. So CZ, I'm sure you're disappointed. You've been working on this for a while. What's plan B?
So actually, we're not that disappointed. This is the original plan. So we just invested in a local regulated exchange called HG. We usually call it HGX. So this is then we'll have two duplicate things in the run for a small market. So Singapore is a very advanced market and is very pro crypto. We just didn't think we need both applications there, and it's kind of heavy. So we invested in HGX, and we're gonna use that as our hopefully in the future as our Singapore service. So yeah, so it's not a huge surprise. I think many of the people are misunderstanding the situation. They see a withdrawal from Binance, they get all worried. We're not leaving Singapore. We're still very much invested in Singapore. And Singapore is still one of the leading countries in the world for crypto and blockchain.
All right, so you told me something similar when you were winding down the Binance UK, and now you've said to the Sunday Telegraph that you're building your UK arm up again. What are your plans in Great Britain?
So for UK, yeah, so we are in the process of reapplying for the license there. UK, we tried a few different things, and then we are in the process of applying for the applications again. So yeah, so UK, everything's on track. So yeah, this things sometimes go through some what you call volatilities or changes in plans, but yeah, we're proceeding full speed ahead of UK. We also have a large UK team now. Well, not large, but we have a UK team based in UK. We're renting an office there. We're establishing a physical presence, all the usual requirements that's required for getting a license.
CZ, good morning. It's Anna actually in London, and I wanted to ask you more about that and your plans in London. What is it that's more difficult to comply with when it comes to UK regulations? Is this around money laundering regulations? Is that why this takes some time?
So to be honest, the KYC AML is the really easy part for compliance. Those things are done out of the wazoo in the banking industry. In the crypto industry, we actually do more, or at least on par with the banks. So that's a very established process. That's not that difficult to follow. In the crypto world, we also use what we call on-chain analysis. So we look at blockchain analytics to determine which transactions come from where. And there are very fairly mature third-party tools that's being used for that. So that part is actually the easy part. Many of the regulations today only focus on centralized exchanges. So they don't look at DeFi, they don't look at NFTs, they don't look at many other things. So we are often talking with regulators, say, hey, how do we regulate these other parts? So we're really wanting to help regulators to have a broader view of the crypto industry. Crypto industry is not just centralized exchanges, not just KYC AML. Even in the centralized space, we have to think about things like listing framework. How do exchanges choose which coin to list? What's the criteria there? How do we handle customer disputes? In what situations do we compensate users or not? So there's a lot of this kind of things that current regulations don't look at, and we actually want to educate regulators to look at more broader scope.
Okay, so it's not all about know your customer, it's not all about anti-money laundering, it's about the other things that you've pointed out there, and the way that regulation rubs up against this still fairly new, for regulators at least, asset class. Where do you see regulators getting this right from the Binance perspective, from the CZ perspective? Where are the regulators in, where do they have a good handle on how to tackle crypto?
So yeah, that's a pretty that's a very subjective opinion. But I think the regulators that are willing to talk with industry players typically will learn more, because right now, to be honest, this industry is so new that most regulators do not come from the industry, do not come from the crypto industry, unlike the banking world where you have seasoned banking officials going to the regulatory realm. So I think in places where the regulators are more open to talking with us and also other crypto industry players, it's a mutual learning and mutual helping perspective. So we need to work together very closely to build this industry, to build a healthy industry.
A healthy industry that some say, I mean, our own Bloomberg intelligence analysts saying the US is getting left behind here because of the lack of spot ETFs, for example, the fact that regulation perhaps is more tough versus other areas. Do you agree with that? Is the US investor behind the curve related to others because they can't access certain products?
To be very honest, different countries have different ways of regulating. There's not one country more advanced than the other. They're just more advanced in different areas. So I can give you a couple of examples. US is actually very advanced when it comes to banking support for cryptocurrency exchanges. The ACH integration in the US allows cryptocurrency exchanges to deduct money from users' bank accounts automatically every month. In other parts of the world, this is usually not possible. So US is very advanced on that. And US also have the most innovations in DeFi. I believe more than 50% of the DeFi projects are based out of the US. US is more strict on futures, ETFs, and other products, interest generating products like yields or staking or earning, however you call it. So US is more limited on the product scope that an exchange can offer. But within the pure spot crypto exchange space, the banking integration is very strong. So different jurisdictions are a little bit different. Yeah.
CZ, Elon Musk said the sign-up process for Bitcoin was a little bit too complex for him. He said he had to jump through too many hoops to trade on Binance. How do you respond to that? Do you change your UX?
So I think the part of the US that he's complaining about is actually because we added such strict compliance for KYC, AML, and also he's a US citizen. So number one, I want to thank the fact that he actually tried to register on Binance.com. I think that actually our intention itself is very respectable, and I really thank him for that and for him to making that public. We can't onboard, Binance.com cannot onboard US users anyway, so he will fail at some stage. So I apologize for that experience. And I've since did redirect him, suggesting to use Binance, to consider using Binance US. And it's a smaller product set, as I mentioned, because of the regulations there. And yeah, hopefully he enjoys that. We'll see what happens.
Relationships mended, perhaps there. CZ, thanks so much for joining us. The Binance CEO, CZ, speaking to us about their operations in Singapore initially, but then around the world. Coming up on this programme, we'll get back to the Omicron variant. Tim Spector, King's College London Professor of Genetic Epidemiology. He runs an incredible data set. We'll ask him about that next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Caroline Hyde in London and Matt Miller in Berlin. Let's talk about the fight against the Omicron variant. UK Prime Minister Boris Johnson warned the UK is facing a tidal wave of Omicron infections. He set an end-of-year deadline for the country's booster programme. Joining us now for more is Tim Spector, Professor of Genetic Epidemiology at King's College London. Tim is the founder of the Zoe app, arguably the world's largest citizen science experiment for those outside the UK who are not familiar with it. Tim, let me ask you, thank you so much for joining us. You track symptoms in a very real-time way. When it comes to Omicron, are you picking up anything that can help us understand the symptoms of Omicron or indeed the severity of the virus?
Yes, we have. So we have about 1 million regular users, and they're reporting when they're told they have Omicron back to us in real time, and we're picking up their symptoms. And it's telling us really that this is hitting people who've been double vaccinated, who've had boosters, pretty much everybody. And we're accumulating data really every day. And we've now got information on about 500 confirmed Omicron cases that we're just starting to sort through. But the early indications are that we're seeing symptoms that are broadly in line with what we were seeing with the Delta variant, but just slightly milder, so that most cases have what seems to be like a normal cold, It varies with some people. Some people will have fever, but most people it's just cold-like symptoms. They get fatigue, headaches, sore throat, runny nose, sneezing, and it's a minority who are getting any of the classic symptoms. The minority who get coughs, fevers, or loss of smell or taste. So no new symptom as yet, but it does seem to be hitting everybody, regardless of what their vaccine status is. But so far, not hearing many reports of people needing hospital treatment or anything else at the moment. So from an individual point of view, it's a reassuring, but obviously from a population countrywide perspective, it's not good news because it's spreading like wildfire.
Professor, then you don't see that much of a difference in terms of vaccinated or unvaccinated with regards to those who get the infection. I'm wondering what kind of difference you see between those who are vaccinated and unvaccinated with regards to symptoms, or are those also similar?
Well, so far we don't have many reports of people unvaccinated because in the UK, 95% of people aged over 55 are vaccinated anyway. So most people who are using our app are not, they've all been vaccinated to some degree. So we expect that it'll be more severe in the unvaccinated and will be leading to hospital infections in that group. So really what we're saying is we're just giving the data back on the majority of people. And in the UK, most adults are vaccinated and they're still expecting mild cold-like symptoms when they do get it.
Talk to us, Tim, about the various tests in which people take and how accurate they are. We've got the airline industry yesterday writing a letter to the Prime Minister saying it was too tough to have these PCR tests once again in place and making things just too challenging for that industry. But from a health perspective, how good is a lateral flow test versus a PCR, for example?
Well, the challenge with Omicron is that the latency, the time between one infection and the other, is much more reduced, is quicker than with Delta. So you really don't have much time to do by the time you've got the PCR test, you could have got reinfected again. And so lateral flow tests are our best protection against this. And getting a lateral flow test just before, ideally within 12 hours of, say, flying or doing anything else like that is much more important nowadays. And we just have to accept that we need that speedy test. And yeah, they're not perfect, but I think it's what's needed now is many more people doing lateral flow tests just before they get on planes, just before they go to major events, etc.
Thank you very much. Tim Spector, Professor of Genetic Epidemiology at King's College London. Really great to talk to you. Yeah, lateral flows, a big difference between this festive season and the last. More Bloomberg Surveillance is ahead. This is Bloomberg.